Monday, July 28th, market analysis. Stan Ehrlich. This is going to be short and sweet because there's not much going on. We have the stock market indexes more overbought. That interests me a lot because this is almost screaming bloody murder territory, which would be 90 or higher on the RSI daily, and it's up to 87-ish. So I think we're closer to the beginning of a sharp break back to, I think, at least the high prices that we saw approximately in November, December, January, February. That is very substantial historical support, which we already tested. It passed the test. So now we're significantly higher, overbought, and probably likely to have a downside break. I would expect it to start this week, anytime. And the 1-minute chart doesn't really help us much. And the S&P Spider SPY is the same as the E-mini. And the NASDAQ QQQ is also about the same. Now, the NASDAQ futures is like the QQQ as you would expect, overbought, but not quite as much as the E-mini. So all of these are candidates for the beginning of a break that just don't seem to want to start yet. The YM did make a new high, but a lower close. That's dangerous. Not close to historical highs yet. So minor double top, maybe too soon to tell. And the 1-minute chart doesn't help us much. The Russell, almost a new high, tried, not quite. And the close, like the others, was around unchanged, maybe a little lower on the average, but no major reversals. And the 1-minute chart doesn't help a lot. The bond market may still have a small head and shoulder bottom, which is maybe the last shoulder low on a larger pattern, which started in April, which is a medium-sized 3 or 4 month, about 3-month head and shoulder bottom. But we got to close above today's high, ASAP. This was a minor reversal, didn't kill the little pattern of 3 weeks in size. But if we start to drop below 112.21, that's not good. I'm friendly because of the patterns, but they're not breaking out yet. Let's see, the notes are pretty much the same story. So I'm waiting for more bullish activity in the interest rate futures. Crude popped up a lot, but we're still between a rock and a hard spot. 86.50 has stopped the rally so far. In fact, a little bit lower. 87.50 is a little bit more profound resistance, and we're pretty close. Support come down to 62.75. So if the support is broken, you're going to drop some more. If the resistance is broken, you're probably going to rally some more. But I have to favor the short side because of my gigantic reversal on June 23rd. So far, the top of the market. Yikes, what a great one. Next, we've got new lows on the move under my head and shoulder top in natural gas. It is working just perfectly. Not very fast, but you never can make the market do what you want it to do. You always have to move with it. The market is always right, and you are sometimes. So, new lows, that's good. Coming down, that's good. You know this downside objective is very low, 1.1, may I 1.16, whatever. And it's working fine. There's no trouble with this. Resistance stopped the rally on Thursday and Friday and today. New low. I believe, yeah, it's a new low close as well. Hey, great. We have a bearish engulfing on Thursday of last week on heating oil. It rallied up a little bit, still coming up a little bit, but not canceling out the reversal. I need to trade above the high of the reversal day in order to negate. Plus, remember, we had a big sell signal on June 23 that worked really well. Remember, we get short when it makes a low lower than the previous day's low. So we got short about 22.65-ish and closed with a whopping profit on that day for a scalp and or follow through the next day on overnight trades. I'm still bearish. Next, gold, minor new low close for a few weeks, 3 weeks. Bearish engulfing on the top of the rally. Great, perfect ER sell signal so far. 1, 2, 3 days down after the sell signal. Looking for a test of 33.06. Probably going to break it. And then down to the next support level of 32.08. Next, silver. A little bit more of a dip. No signals. Simply overbought. A little divergence. I don't see anything majorly bearish about this. So I'm expecting a 37.75 test. Not too much lower. And maybe another one down to 63.11. That seems a little more likely. But you got to dip below 63.75 first on a close before it's going to slide down a little bit more. Next, platinum. Lower close, no signals. Looks like it's stopped out for the moment. Not much to go on. No patterns. Can't say a hell of a lot. Looks a little bearish. Next, high-grade copper had a bearish engulfing ER sell signal today. Brand new today. I think it's going down now to 51.516-ish, and very possibly to a little under 5. Trading at 5.6 at the moment. Pretty sizable percentage break. Got to start closing below today's lows in order to keep it sliding. I like it. Major sell signal. Overbought conditions. Divergences. Got to be good. Hope it works out. Minor new low dip on soybeans. Grains just don't seem to want to start the trend higher, except for soybean oil. Beans, I'm looking for a little bit more of a dip. Soybean oil recently made new highs, is already halfway up to the upside objective, which is 62.62 or higher, and it's stalling out for a day or two at high levels, so it's holding. Like it. Look like it's going to go up more. Soybean meal is almost the exact opposite. Almost a new low close almost. It sucks. Sorry, it's going to make new lows and drop off even more, apparently. Same with corn. New low close. New lows for a couple of weeks. Almost a whole new low for the trend for months. What can I say? Nothing. Wheat. Come on. Same thing. Next, Shell almost closed the gap on Friday, popped back a little bit. I think it still stands a chance of closing the gap. Kind of between a rock and a hard spot for the moment, waiting for some signals or reversals. Apple stopped at the same prices, resistance area for the 6th day in a row. Sideways. I think it's rolling over, but we don't see it start to drop much yet. Next stop on the way down, 198. But if you close above this resistance area of 216, I could easily pop up to 219 3/4 and maybe get back into this large resistance area, which would be quite a bit of a rally, maybe 257, 237, sorry. But I don't have any breakout one way or the other. It's just resistance is stopping it for 6 days in a row. That's pretty good. And of course, the high day was my bearish engulfing ER sell signal, July 7th. Next, the gap is closed very accurately. On Wednesday of last week, it gapped down for Thursday. Friday, it came back and almost closed the gap and finished the job today. Closed it, turned around, slipped a little bit, bell rang. Now what? We're still inside this pennant formation. There's no breakout of it. The gap thing took place all inside the pennant, waiting for breakouts. And NVIDIA, new historic highs, overbought again, divergences. Again, I don't like buying markets that are overbought, especially when there are a few other corroborating pieces of evidence that predict, hasn't happened yet, some sort of move in the wrong direction if I bought it. If I bought it here, I would be calling myself a chaser. I'd be chasing the market up. That's not good. Almost always it's going to turn around and bite you in the rear end. E-mini, I'm over. You guys have a great day and profitable trading to you.